Thank you everybody for coming out. My name is Chris Shang. I work with Mucker Capital in LA, also with a few other VC firms as a growth advisor. I've also stepped into the gamut again as a founder for the third time because I'm a masochist, as I'm sure quite a few of you guys are too. By just show of hands, how many of you guys are actually founders? Awesome, okay, cool. So this will be something I think is hopefully helpful to you. Show of hands, how many of you guys were able to download the previous playbook? Okay, great. It's not a requirement. It's not, we're still going to cover a bunch of other stuffs, but I will suggest that you do download that because it's more of like the more tactical kind of, it's very much more like nitty gritty, like action steps. So what I'm going to cover today is going to be a little bit more holistic, a little bit more high level, but that gives you like all the tools, for example, that I use. Literally like maps out the steps of what you need to do to accomplish quite a bit of this stuff. Cool. Format wise, this is probably be like a 30-40 minute kind of presentation. Keep it really kind of short and sweet, and then just really want to like answer questions. So if you guys have like any like bottlenecks around go to market, any issues around how to figure out like which channels are going to work or which audiences to focus on, I would love to open that up so that we can really make this more interactive and solve something that you guys can walk away with real value. So today's agenda is I'm going to share a little bit more about myself, just because you guys don't probably necessarily know who I am and why I am know what I know, or in terms of like going to market, and then also want to discuss some of the key metrics that I've started to see around fundraising today. I'd say like the fact that I've worked in this advisory capacity and had exposure to working with 300 plus venture-backed startups on go-to-market and growth, it's almost like crowdsourcing this knowledge base. And so my goal here is to really just share a lot of the themes, trends, different types of things that I see back to you. Also just wanted to cover the current economic environment, how that relates back to go-to-market, especially around like unit economics and filling your sales pipeline. Also, we'll dive into more of the go-to-market strategies, high level, 3 key variables around that, which is audience, channel, and messaging. Discussing the intangibles and like how do you actually get started. This is one of the biggest issues I tend to see with a lot of founders, is like we can give them everything under the sun and lead them to water, but I don't know if it's a psychological thing, but there is like this almost like a fear or pressure for them to actually do the baby steps to get things started. So we'll talk about what I tend to see there. Building a testing environment and culture, I think obviously in the startup world, this is preached upon over and over again. It's super critical, but I'll talk to you about how I think about this and how we've seen other startups do that successfully. And then this is not necessarily stuff that I've covered previously, but this is going to be a little bit more from mid-funnel to bottom of funnel conversion. So how do you take from like the demand gen side, sales qualified leads, and then turn them into customers? Again, coming now from a founder role, I've had to do this and take ownership over the sales process. And so I'm going to share with you a lot of the learnings that I've come across there. And then last thing is just how do you actually scale a performance-driven sales team? Cool. So just again, some quick background. I've been doing growth marketing for 10 years, past 7 years up until me starting Leader Pro, which is my startup now. I was running a growth marketing agency. And for the past 4 years, I work really closely with a lot of the VCs in the LA ecosystem, particularly Mucker Capital. But again, I also work with Crosscut, Upfront, Mantis, more closely with Mantis and Crosscut and their portfolio companies. So usually when they have like a problem around go-to-market, that's when they'll hit me up and try to talk to them and figure out what those bottlenecks might be. At this point, again, 300 plus venture-backed companies on go-to-market and growth. Everything from SMB, mid-market to enterprise. So help companies sell SaaS solutions to funeral homes, CrossFit gyms, a lot of different types of medical practices, to mid-market, that could be like accounting firms, all the way to like traditional enterprise. Channels are always different, right? So I can share with you a little bit more about that. I also host a podcast called PodSaaS, where I've interviewed 100 plus founders, which I think has been really useful for me selfishly too, just kind of like learn the tricks and trades of like what they've seen to be successful. And then lastly, I'm the CEO of Leader Pro, which I'm going to just share a little bit about what it is because I will reference it, so just give you a little bit of context for some of the things that we've seen that worked well there. Basically, we're like a dating app for B2B sales. We match buyers and sellers with software. If you guys are familiar with G2, it's similar to that, which is you can create a free listing, get exposure to our audience, which we have 60,000 plus enterprise executives at the VP level or higher. And the main difference is it's a pay per meeting model. And then lastly, it's really like a true marketplace. So if you think of Uber, where the passengers and the drivers have to be registered users of the application for them to facilitate the interaction or the transaction, we're the same way. So buyers and sellers are both registered. And we literally just hit the year mark since our beta launch. And we've signed up customers like Deal, Lyft, Monday, Hired. So I'm just sharing this so you guys have context later on and it makes a little bit more sense. Some quick housekeeping. For any of you guys that are going to be in LA for LA Tech Week next week, we're also hosting a couple of other events down there. We have a founders roundtable. It's called From Seed to Series C. So we have a bunch of founders that are coming together, sharing a little bit of their war stories. And so I think as a founder, you tend to feel like you're operating in a silo a lot of times, and you don't know what you don't know, and you don't know what the community at large is necessarily going through. So some of the things that you might be personally feeling a lot of pressure under, this is a way for you to maybe like listen to some of these other founder stories and maybe gravitate towards one or another of their stories. Also next week, we will be at Plug and Play. I'm going to be doing a very similar kind of presentation with Google X. We also have a little bit more relaxed event next week if you guys are going to be out there where we're going to be taking a curated group of founders and VCs out on a boat in the water just for a few hours, enjoy Tech Week, and this is going to be on Friday of next week. And then we'll have a lead gen conference based in LA in the summertime. And then just also feel free to share, take pictures, whatever, anything that you guys find valuable from this event. These are the hashtags that we've been talked to from Andreessen to share in terms of like Tech Week and the different types of hashtags. All right. So now we're going to kind of get into the very beginning, which I think like, let's really quickly ask here by show of hands. I know majority of you guys are founders. How many of you guys have raised some kind of outside capital? And then by show of hands, how many of you guys are actually looking to raise capital? Interesting, okay. So for you guys that are out there raising capital, I mean, it's a very difficult market. Like I would say, difficult in the sense that it's somewhat challenging because cash is costly. And so, you know, on these advisory calls that I do with a lot of different types of portfolio companies, there has been this kind of refocus back on, you know, the basics of running a business, essentially, right? So like things like pipeline metrics, cost per lead, customer acquisition costs, you know, lifetime value, sales cycle, close won rates, really trying to understand how are you going to tackle customer growth, looking at things like ARR and ACVs and trying to figure out what your path to profitability looks like so that when somebody infuses cash into you, that you know what you're going to do to be able to get that traction that you need to get to profitability. It's not to say that you have to, right? You can continue to have a high burn and continue to grow and accelerate your growth around new customers, but you need to know what that would look like in the case or the scenario that you must kind of pull back a little bit. And I think we're obviously seeing that now, but it's been more so reactive than proactive. This is some of the things that, again, like I would say, you know, I hear about founders trying to raise a lot right now. And it, again, I think I wish somebody had taught me this before, but I luckily have a few mentors and I do have the other perspective from the VC side of things. I think you need to be aware as founders that because cash is costly, you're going to be giving away equity at a discount, right? And I think that not enough founders think about that. I do know at least a handful of founders now that have to have at least a $50 million exit in order for them to feel like they have a break even for the time spent on their startup. And if you think about that, that's pretty crazy, right? Like 50 million at least of an exit. So again, make sure that you have your basics down, know what the clear path to profitability is, clear path to customer growth, and you also have to do all these things efficiently, which is what we're going to get into. Just talking about the sales economic environment, these are some stats I think is really important as it relates to just second quarter versus first quarter of 2023, you're seeing a 24% increase in sales cycle year over year. So like, for example, what may have traditionally been a 60-day sales cycle is now 75 days. And then the average contract value, your ACVs, we're seeing like quarter over quarter is down 20%. So what does that actually mean? It means that you're spending a lot more time to close deals, but these deals are drastically reduced in terms of what they're adding to your top line revenue. So you're going to have to do the following, which is you're going to have to add more quality leads top of funnel. You're going to have to look at quality versus quantity as it relates to all the different channels that you're using for acquisition, whether that's paid, organic, referral, product-led, etc. We're seeing a shift more towards account-based marketing and personalization. So again, trying to do a bottoms-up approach, top-down approach. You're really trying to do everything nowadays. And in terms of sale efficiency, we're seeing a lot of companies that are lowering their headcount and trying to focus on more product-led growth. And then also focusing on their current customers and landing more expansion deals. This is talking a little bit more about the practicalities of go-to-market. So I talked about this in the very beginning, but I try to dumb this down because I think it's really important to keep things simple. But the three variables that you're trying to constantly optimize for on go-to-market is going to be audience, channels, and messaging. And again, I don't see enough founders do this exercise, but when you talk about audience, we're all probably familiar with TAM. It's the thing that you go out there and you pitch investors on, but not a lot of founders will look at what their SAM or their SOM looks like. TAM is great because I think it's what your vision is, right? It's like where you think the product is going to ultimately land. But when you launch your product, it's not going to be able to service that entire market 99% of the time. More realistically, where your product is, it's going to either be an MVP or a beta in order for you to start acquiring customers, but you're not going to be able to acquire typically that whale or that huge logo out the gate. And so it's really important because the value that's going to be realized from your SOM is going to be very different from your TAM. And so how I think about it is over time. So as your product is going to evolve over time in the next 3, 4, 5 years, same thing with your market size. So I think you need to look at, like TAM, I look at as like 3+ years out. I look at your SAM or your serviceable available market as like what you're going to be able to address in the next 1 to 2 years. And then serviceable attainable market is actually what you're able to acquire today. And I think that's really important because if you think you're going to get, this enterprise type customer and you're going after it, you're going to be burning a lot of resources to do so. Versus you can get some of these smaller wins where maybe there are smaller deal sizes, but they're going to have a positive impact on your cash flow much more quickly. So when you're doing your go-to-market, this is where you really want to focus on your SOM when you define your audience. The best way to do this if you already have customers is to understand what those customers are and then generate a lookalike audience against them. And I say the top 3 things when you're doing that would be looking at customers that love your product and evangelize and vocalize their love for your product. The second thing would be looking at customers that have the highest usage of your product. And then the third would be looking at customers that ultimately have the shortest sales cycle to convert into a customer. And then if you don't have customers yet, hypothesize around it or look at your current deal pipeline and look at the ones that are converting the fastest or the shortest sales cycle, because those are the ones that get the pain point and the solution the easiest. And once you know who they are, literally look up their LinkedIn URLs. Because once you have I'm a very visual person. I think once you visualize it, it's very difficult to deny the truth and the fact. And I think like a lot of times when we talk about our market size or our audience, our target audience, we maybe get outside the box a little bit where it's more daydreaming around who we want to get as customers versus what the practicality and the reality is. And I'll show you what that looks like. And the last thing is, you're going to want to figure out is, so where are they? And that's where, if you download that previous playbook, it shows you exactly which resources to go after, depending on what type of audience that you have. This is kind of a lot of stuff I just covered in terms of audience by customers. And this is an example. This is like based off of a customer of ours on LeaderPro, which is essentially they first started off telling us, hey, we want to go after HR executives at enterprise type companies. We asked them to go through the exercise of sharing LinkedIn URLs of existing customers and exactly who you guys got to buy into your solution. And these are real people that they provided to us. And so the takeaway was, all right, you told us HR executives in the very beginning. This tells us a very different narrative, right? So we need to focus on VP, head of product engineering at enterprise tech companies. It was very different once we actually drilled down into it, and it was very easy for you guys to see too at this point. And then the where are they? This is going to ultimately dictate the channels that you're going to have access to your target audience, right? So I think we're all familiar with a lot of these things. Again, this is also shared in the previous playbook, but paid databases, ZoomInfo, Apollo, Seamless, Clearbit. The caveat to that is that gives accessibility to everybody, so whoever is able to pay for it is also getting accessibility to that same person. And those end up becoming, I feel like, super crowded or noisy channels if you don't get creative around the types of messaging that you do. The next would be like trade shows, conventions, associations, usually by industry or role specific. The other thing too with a lot of these trade shows and conventions is that they have things called buyer activation programs. They can get really expensive, but they can also be super effective in terms of like getting in front of the attendees of those events. Online directories, like Yelp, ZocDoc if you're targeting the medical profession, G2, Crunchbase, AngelList, etc. Professional groups like Facebook and LinkedIn, forums like Reddit, Quora, GitHub. Those are great, especially if you're running like market research surveys, which is essentially like a qualification form disguised as a market research survey. But you can leverage those because you don't know exactly who the users or the audience is going to be. So if you're selling into licensed professionals of some sort, whether it's a medical practice, a contractor, even like a Airbnb host or short-term property rental owner, a lot of them have to be licensed. So these are going to be available through public databases. And you'll be surprised about the kinds of information you typically find from them. But you can look under like local, state, or federal databases. And what that basically means is you do a license lookup for a particular license, say for example, cosmetology, under a certain geography, like in LA, for example. And you'll see it populate with a bunch of like those public databases. And the last one I would say is like job boards and job posting sites, like LinkedIn and Indeed. If you're trying to target like a VP of engineering, you can actually go on Indeed and you can search for VP of engineering under resumes, and you can then reach out to them through Indeed. It just, again, depends on what you guys are trying to say to them. So these are channels. So we talked about the different types of data points that you can collect from all these different resources. You can collect a phone number, email, physical mailing address, social media URLs. And these channels are now the different ways that you can actually get in front of them, right? So a phone number gives you access to like SMS, ringless voicemail, cold calls. Emails actually gives you access obviously through email and then retargeting through paid channels. Mailing addresses, direct mail, walk-in, social media URLs, gives you the ability to do DMs. And it's not to say you're going to use a single channel, but if you do build, and this is again in the previous playbook, but if you do build out these sales initiatives that are like 7 to 10 days long and super sales intensive, the idea is that you want to leverage as many channels as possible to get your messaging in front of them with different types of content sometimes. I think about this a lot when you think about the consumer play, right? It's like if I was selling a brand new like no-name brand of sneakers, like if I was just bombarding you through email or LinkedIn DMs, you would probably never buy those sneakers. But if you saw a billboard, a streaming ad, Instagram ad, and then I do a really good job of retargeting you and you're about to prepare for a race, and then I say, hey, here's this 20% discount code, through an SMS. At that point, you might be a little bit more privy to redeeming that and then buying it because you've gotten all this different points of awareness. In the B2B space, I don't see a lot of companies and founders necessarily doing that outside of email and LinkedIn, where I think it's super critical to do so. And so we're seeing a lot now gravitating towards traditional things like cold calling, and especially because email deliverability is becoming a bigger issue now too. You're seeing a lot of things like going back to old school things like cold calls. Direct mail as part of like account-based marketing is also becoming super effective. And then social media DMs, but not in LinkedIn, through Twitter, things like Twitter and Facebook, etc. Messaging call to actions. So the first one I think everybody's very familiar with, which is like ROI-driven type of message, right? We are this company, we can increase your top line revenue by 15%, or in the B2B world, it's gonna be, again, like increasing top line revenue by some degree or improving, bottom line margins, right? So, or we're gonna help you save 20% on the bottom line. And then they just keep bombarding you with it over and over and over again. And it's like, I'm sure you guys have seen this too, but I'm just funneling this up to the top of your inbox or just pinging you again, it's the exact same language around this ROI. And so through LeaderPro and our go-to-market and our outbound strategy, we leverage all of these different types of call to actions. So if you do it across like a cohort of 100, what we found before, like running as an agency before too, like that if we just did this ROI-driven type of sequence, we might luckily be able to convert 0.5% to 1% into some kind of like demo for our clients or customers. But when we actually try over the same timeline, 7 to 10 days, but like 1 to 2 touches per call to action, we give that same audience different flavors for them to respond to. And so by choosing from any of these types of lists, like 6 to 8 different types of call to actions, same timeline, but just shortening, the amount of reach outs, we were able to get to more closer to 8 to 12% conversion into booked meetings, right? And so I think that's really important. So I'll cover it briefly. Again, everybody will get an email of this presentation, but ROI I think is typically going to be more education heavy. Feedback, where you can leverage social proof. So this could be like the pedigree of the founders, for example, or if you have certain customers or whatever kind of like again social proof that you have to leverage. You can use market research as a way in. So it's like this is where, hey, I'm trying to do some research around this industry. We're solving this pain point. Would you be open to sharing that? This could also come in the form of qualification forms, usability studies. You can create some kind of exclusivity, use incentives like cash or gift cards, do thought leadership things like host events like this, or participate in conferences or host a conference. Leveraging, again, like social proof, as your product grows as well as your customer base grows, you're going to be able to level up across the different tiers. So whereas you might start off on like a tier 3 level type of customers, use as many of those to again then generate the awareness to get to the tier 2s. Or you might get customers that start off in the tier 3 and grow into a tier 2 or grow into a tier 1. Next thing would be like communities. We call this astroturfing, but spending a lot of time in different types of online communities is really important for you to build credibility and trust and awareness. Host a podcast, invite them on. That's what we did for LeaderPro 2. And when we launched out of beta, we had already had 50 guests over a 6-month period, and our guests were our target audience, right? And so we ended up converting 5 of them into customers right when we started to launch out of our beta. That's a great way to do it. People love to talk about themselves. Invite them to join a product advisory board. So again, people love to feed into people's egos, feed into people providing feedback. People are a lot more inclined to have a conversation with you or engage with you, when they feel like they're providing some kind of value to you, as opposed to being sold to, which I think majority of us hate to be sold to. Asking people to become guest speakers at a conference, for example. So this is the getting started part, and this is something I see a lot of founders run into, which, I'll do these bi-monthly calls, so whereas every 2 weeks we're talking to the same founder over and over again, and we're trying to make sure that they're moving the needle on filling their sales pipeline, converting to customers, etc. And I see them not moving the needle very much, and there's cases where it could be 3 months, 6 months, a year, and there's very little progression or growth. And I've always been curious as to why that is. And a lot of times it's fear. A lot of it's A lot of times it's like this idea of perfection, or we're not ready yet, product's not ready yet. Or it could just be like discomfort, like you run to this a lot with technical founders where they're just not comfortable, being out there selling. But no matter what, I think every founding team has to be involved in the sales process in the very beginning. I've seen companies actually go through this exercise where they hire against sales and marketing, and it's a 50-50 toss-up in terms of like you're getting somebody really credible and like morally ethical to a certain degree sometimes. I know a company specifically that I'm thinking about right now where they hired a VP of sales, and that person didn't get their customers to sign contracts, and they were actually loss leading, and the CEO was not aware of that. And when they went out to go raise their Series A, it basically fell apart because when they did their due diligence, they didn't have the paperwork to substantiate it. So you don't ever want to kind of get caught up in those situations just to hire against the problem. I think you need to, as a founder, take ownership and accountability over what's to be expected, and build out that process. Even if you're hiring against it, build out that process alongside that sales or marketing hire. These are the top 5 excuses I tend to hear from founders, which is, again, product isn't ready yet, it's not perfect, bottom line is never going to be. And what you think is perfect is maybe not where it's going to actually be perfect, because when you take that first step of getting the first customers, they're going to actually tell you a bunch of different things that, ultimately is going to change the course of that. Again, hiring sales and marketing teams that they feel like they need to do that. They're unable to close customers until XYZ. You only need to close one customer, and then reverse engineer the process, and then create lookalikes against that, right? We tried, and then again, insert whatever excuse, and then we need more capital. That's very common one. Or it's like another one is like, hey, here's a competitor that raised 5 to 10x more capital than we did, and they have an inferior product. At the end of the day, it doesn't really matter. Like, you're still in the same boat. Maybe they have a stronger go-to-market strategy. Maybe they're a 3-time founder. Maybe they have, the pedigree or, from like having done this before, where somebody feels like, they already have that relationship so they can go raise more capital than you can. Whatever the excuse is, especially now in this economic environment, it's really not going to hold a lot of weight anymore. And a lot of this is, again, I think you really have to dig deep as a founder. The odds are stacked against you. You have probably a higher chance of becoming a rock star musician or like a rapper than you do, ending up as a successful founder in 5 to 10 years from now, right? So just know that 90% of startups are going to fail. You have a 0.0004 zeros and a 6% chance of becoming a unicorn, and it's going to take an average of 7 years in order to do so. And the top reason startups actually fail is that they run out of cash or lack of investors. So this is my thinking around, I think, the answers that, to that in terms of what you have within your control. Be desperate and stay motivated. You really have to dig deep. I've been that starving founder, 8 to 9 years ago when I did my first startup. Person going in, getting groceries, not knowing if my card was going to work. I carry that, and I think that's really important for me in terms of like how I get really creative, in terms of like what we try to figure out. I never want to go back there. I think a lot of like successful people end up thinking in that same way. Be lean. You kind of have to redefine really what that means nowadays, and then try to figure out a way to get to break even as soon as possible. Even if that just means that you have a 3-person co-founding team, and you guys are paying yourselves, $1,000 a month, whatever it might be. Figure out how to get to a place where you guys can operate for the next 12 months, 18 months, with as little as possible in order for you can continue to move forward. A lot of this is a waiting out game, to be honest. And the next thing here is be data-driven. So I think everybody knows this. For whatever reason, I don't think a large percentage of founders that I run into practice this. And so I'm just going to kind of reiterate on some of these points, but you have to generate your hypotheses. You have to run experiments like crazy. Even when you find the thing that's going to work, you have to be continuously running experiments because you have to continue to beat whatever that thing that worked. And also that thing that worked is probably going to fail in 3 to 6 months or break. Test and set benchmarks, validate. And once you have a validation around those outcomes, then automate. This is another little caveat that I see a lot of founders do, which is they try to automate everything in the very beginning when they don't know what the expected output is, and then they say it didn't work. And it's a huge lift to automate things. So I don't know why so many founders do that, but yeah, that's what I've seen a lot of times. Test everything. Ways to do that is like listen to the users and customers. Don't fix every little thing. We operate under a 3 strikes policy. So when we hear 3 different users or 3 different customers ask for, a product feature or a request or a bug fix, that's when we'll start prioritizing it on our roadmap, but only then. We won't do like one-offs. Deliver a solution, but always be creative. This could sometimes come in the form of just putting a button on the website or putting a button on the app, and it doesn't really do anything. You're just collecting information. You're just seeing how many people click on that button. And it could be manually fulfilled on the back end, whatever it might be, but I think it's important to just provide a solution in a way that you can collect data. Building an MVP of an MVP, again, could be just a button. We do this so much, but like fulfilling things manually to create a process and or workflow that you can then build on, right? I think it's one thing to just wireframe under assumptions. It's another thing to actually be out in a live environment and then seeing how the users actually interact. And you could go again and build out these wireframes where it's super sophisticated in 50 steps, but maybe it only takes 5. Or maybe it gets too confusing for the user, and those are some of the things that you need to figure out by, again, just trying to get the first few steps out there as quickly as possible. And once you find out what's repeatable, then automate it. The other thing that I love about this is like what testing actually provides. It removes subjectivity. If you have co-founders, this might be something that you guys run into, which is like, ego can sometimes be an issue, but data is true, right? Like you can't argue against data. It settles a lot of arguments, disagreements. It also allows a lot for creativity and trying any idea. I think like when you think about some of these startup stories like Airbnb and Uber, like they all did crazy things. Like they had Uber ice cream and Uber pets, and Airbnb sold cereal. They did whatever it took to continue on. And at the same time, they would find nuggets along the way that ultimately could lead to being a game changer, right? And I think that's where this whole idea of testing and trying different things really comes into play. But you just need to build out the machine or to facilitate, that kind of interaction or exchange. And you can test things against the audience, right? So again, is the end user going to help us close things faster, or the decision maker working from a bottoms-up approach versus top-down? Channels, where does the audience actually learn versus where do they actually engage, right? So what we found is that when we do outbound, we actually also leverage paid advertising as like billboards or building like trust and awareness through thought leadership pieces. And so we'll literally take all the email addresses and upload them and create a lookalike audience against that. So by the time they receive an email, phone call, or whatever it might be from us, there's already some level of awareness from some paid advertising that they've seen already. Again, you can also test messaging, so there's different types of call to actions. I think call to action to me is focusing on engagement. You want to get somebody just to respond to you and break up into those baby steps. So like you need to get responses, positive or negative, it doesn't really matter. You just need to get people to reply. And from there, how do you get from replies to then a positive response? How do you get them from a positive response to somebody commit some time to you? And then how do you get from there to all these other steps, ultimately to a customer? I think a lot of people just kind of try to maybe like bucket it all into this one big step, which is how do we get from outreach to them booked into a demo of some sort. Other things you can test is, again, around product or product-led growth tools or functions or features. So this is where I think I left off on the last presentation. So now converting down funnel from leads to customers. So I've had to figure this stuff out, and it's been interesting because I think you take a lot of the same philosophies from the top to mid funnel, but now you apply them from the mid to bottom. And you need to determine discounting methodologies that work for your product or solution. You need to set expiration dates. Get to a binary answer as quickly as possible. This is, again, something that I think a lot of founders fear, is like getting to a yes or no. A no is okay. A no is good. But you want to get to objections, and you want to categorize those objections as quickly as possible. So I'll share with you some of those objections, but you want to know the reason why people are saying no. And you want to then, again, reverse engineer that back to the particular audience or subset of the audience that's saying no, and for the reasons why. So discounting methodologies, like you might be offering, if you're selling to enterprise, a pilot, a POC, RFP, et cetera. Maybe a lot of you guys are doing this, but setting timelines to actually collecting a payment if you hit certain milestones. So if they realize X amount of value or they get to a certain amount of usage, you need to start charging. And I don't know, again, this I think is maybe psychological, where founders are like, we just want to get them to use the product, but you need to also monetize. And there's going to be big companies out there, like, I work with a company that their customer right now is Google, but they also wanted to try to target Apple and all these other things. And these large logos are notorious for taking advantage of startups. And I've seen also companies that bend backwards and then have to pivot their product because Verizon was their biggest customer and it was like 80% of their revenue. So they did whatever they asked for. But it's then ends up not becoming a scalable product. And so they had to actually pivot. Then you want to offer these, this is just loosely based, but subsequent discounting, to get people to close too. So discount one, might be like, you only see 50% margin, your payback period for that is going to be a month. Discount two, lesser margins, longer payback. Discount three, again, even lesser margins, longer payback. But you want to start figuring out what you can actually do and offer, and what is the bottom line of what you're willing to offer. And then work backwards from that. And then you need to set expiration dates. This, again, works well if you're willing to get to a binary answer. So you can go through that pilot POC, time to realize the value. That could be 14 days, 30 days. You need to figure out when you see users or customers actually realize value from your product, and that's how you set the timeline for expiration of those. And then you start, if you're going to do like just some kind of discounting, you can do it by 5 days, end of month, end of quarter, based on where you guys are set up in terms of like the sales cycle. But by doing and setting these timelines, we literally will offer discounts where it's like we give them 2 to 3 days. It's really kind of short because our sales cycles are short. But we'll give them 2 to 3 days in order for them to accept that first discount, second discount, third discount. And so we'll have a binary answer by the end of, for us, it's like 3 to 4 weeks. Maybe on the enterprise side, it's going to be longer than this because there's more decision makers or individuals involved. But it's the theory and the philosophy of it doesn't change. You need to just still figure out, like, if we accomplish this, then we pull the trigger on this. And this is going back to the objection tracking. We actually pay people for them to let us know the reasons why they're not moving forward. So if you get ghosted, which is the very common thing of people doing as part of the sales process, that's fine. We'll pay them $25 to just let us know why they're not moving forward. And the typical reasons that we see is like, it's not a priority, but circle back later. We're concerned about the ROI. The onboarding time is going to take too long. It could be a distraction for our current team. We're going to go with a competitor, or your product is just missing key features or functions. Now, if you have visibility as to the reasons why here, and thematically you can see the percentage breakdown as you collect more data around this over time, this is super critical for any early stage startup because it helps you prioritize your product roadmap, or it helps you actually improve your sales process. So again, we've seen this be super critical for us and for myself as a founder, but I think it's also very useful for anybody else. Building out a sales team, again, I think this is something that we've had to do. Creating playbooks, you got to sell them on the ease of hitting quotas. We actually will also push everybody that applies into an employment application form, which is more of a soft skills evaluation, especially for the startup world. You need it's a really big lift to onboard new hires, right? And so I think trying to figure out as much as you can around why they're working for a startup and if they have the grit and the wherewithal to actually do it for a long period of time is really important to do in the very beginning. Understanding the market conditions, can you do commission only if you're cash constrained? Building out a comp structure that actually celebrates quick wins. And then the last thing here is always be hiring. When we're looking at playbooks, again, I'm a strong believer in being founder-led sales, and first 6 months of our company, I was just doing all the sales myself. But by doing so, I was able to generate the scripts, the use cases, when to use specific types of messaging to specific types of call to actions. That's how I created that list of the different call to actions, because we tried all those things to figure out what was actually going to be useful. Which channels to use. Again, which ones are they actually going to engage with versus the ones that they're actually just going to browse or not necessarily take action, but just like generate awareness from. Which tools do you provide to your sales team? And I'll talk about that, where it's like we actually have a tech stack that we offer over a probationary period, which is very minimal, just to understand if they have, again, the intangibles that we would want to allocate more resources and or hire full-time. Figure out expected outcomes and earnings. Getting, again, involved as a founder-led sales team so you can understand what those expected outcomes and earnings should be. Create a competitive environment. We do this where we kind of have these things called power hours, where all the sales reps get together and we offer bonuses within that hour-long time. If whoever gets the fastest positive response, whoever gets to a booked meeting the fastest, whoever gets the most positive responses within those hours. It's a great way to kind of build out this camaraderie, but also figure out things that really work, because when you're kind of limited to this 1 hour, you're trying to get really creative around how am I going to get there? And then everybody can share what those learnings are. And then lastly is team visibility and community. It was really cool to see in the early parts of when we were building out our sales team, and I wasn't there and my other head of sales wasn't around because we were at another conference, to see them actually talking to one another and sharing best practices and what they were learning and kind of running off on their own as their own team. So the more that you can generate and foster that kind of environment, I think is really important, because they're going to be then the ones that are battle tested. They're going to go with you into that war. Some soft skill questions that I ask, they're more personal, they're more vulnerable, but I think it's really important to get there. Things like, what's one of your most painful experiences, personally or professionally? Something like, when was the last time you had your back up against the wall? Could be a major life event, and what did you do to overcome that? And then again, for this is sales specific, but we've used this for customer success roles, engineering roles. What do you love about XYZ role, and what specifically about it pushes you to be great? In the current market conditions, I would say you actually can hire sales teams are commission only, but it just again depends on your sales cycle and ACV. If you have a really long sales cycle, but it's a high ACV, I would actually focus on compensating on more so on the sales qualified leads, so generating more opportunities for you and giving a little bit more weight to those, as opposed to standard 10% commission of a closed one deal. And also have a plan to hire the top performers into a full-time role after a 3-month period. So trying to weed them out as quickly as possible. Compensation structure, we again get pretty creative here, but know what the market rate is. So it's about $70,000 right now for an SDR, $100,000 for an AE, but there's a lot of ways to get there, right? And we try to do it in the way where in the very beginning, it's going to be more commission heavy, let alone base salary. In the very beginning, during the 3-month probationary period, it's all commission. But that way, we were able to figure out who has that thick skin to really make it work. I think the other thing too here is to take note is that when you're looking at $70,000 annual salary, as a startup, you don't know if you're going to be around in a year. I mean, realistically, and so what you really have to look at is the ROI in the short term, right? It's you're going to be paying out anywhere $2,000, $3,000, $4,000, $5,000 a month. And so really look at it from that perspective and what ROI can you generate from the short term as quickly as possible. I think it can be a little bit daunting when you think about we have to pay $100,000. It's not all coming out one time. It's going to come out over time. And if they're not proving themselves, then you're not committing to that, right? So I think about that too. this is literally what I figured out when I was going through that sales exercise myself. Was I was generating with about 10 meetings per week and converting about 40% into customers within about a 2-week period at about 15% of my capacity. And so that's how we generated our commission structure. We have super favorable unit economics in the sense that our payback for this is like literally like a month and a half. But by me knowing what I was expecting out of myself, or what I was able to do myself, now I know what I can expect out of a full-time hire, right? And so now you can provide that narrative around, this is how you're going to hit the sales quota, this is the expected sales quota, and how you're going to get to X, Y, Z in terms of commissions. And we're basically telling anybody that we hired in the SDR capacity that you can get to $7,000 a month in commissions only, and this is how. And we literally share the playbooks for all those things, when to use it, and I can show you guys at the end of this real quick, because we have it all stored in Notion, we have all the exact language, and in the very beginning when we first started this exercise, some of the more like seasoned sales executives would be doing their own thing, like coming up with their own language, their own messaging. Ego got in the way. And the more junior people who were like right out of college, they literally just copy and pasted everything that we did. And they were constantly outperforming in terms of like getting to mid-funnel, like sales qualified leads and book meetings. So I think that's something too, is like build it out because there's a process there, and prove it out and validate it, and then just share it and make it super, super easy for your sales team. The last thing I'll say is like always be hiring. Like, we've probably gone through like 20 to 25 sales reps at this point. We have a solid 6 that are really, really killing it for us. And I think that's, and we're constantly looking to add. We're actually starting a leader university, which is kind of like a way to source talent, but training people how to do sales and continuing to funnel in for our talent pool. Figure out how to scale onboarding again in a way where it's not this heavy lift on you every single time. So again, we store everything in Notion, so it's really easy for them to get access to it. And we share all the resources, we record everything, and that way they have everything that they pretty much need to be successful. We set a probationary period for 3 months. That can be up to you guys in terms of how you do that. And then we allocate a minimal tech stack to those first few hires in that probationary period before we invest all the resources that we need to make them successful, because really we're trying to evaluate their willingness and their work ethic. And then just lastly, Q&A here. I'm going to start taking some questions. We have 30 minutes that we can do so. If you want to get in touch with me, if it's anything growth related or advisory related, just have like a quick question, feel free to email me at that address. If it's investment inquiries, you can email me at cs@mucker.com. We are primarily like a pre-seed stage investment firm, but at the same time, we also do later stage rounds, everything from seed to Series A. Typically, we don't lead, so just keep that in mind. If you have a lead or you're looking for follow-on investment, that's when we can become useful. If you are an enterprise, selling it to enterprise and you're a B2B SaaS company, let me know. Happy to list you guys onto our platform on LeaderPro and get you guys mid-funnel sales qualified leads.